Tracking down stolen internet funds, designing global e-commerce payment systems, and guarding an ancient king's gold all rely on the exact same discipline. In a modern business environment, the role of the accountant is that of an information system, collecting and communicating the economic data that connects an organization to stakeholders. This is accounting. It functions as a language, taking raw, real-world economic events and translating them into a structured format used for decision-making. Without this translation engine, organizations lose the ability to see their own progress. Both ancient empires and modern corporations require this data to understand their own financial position. Imagine starting a manufacturing plant. You have to coordinate the delivery of heavy machinery, pay rent to a landlord, purchase raw materials, and issue weekly checks to a workforce. Amidst this constant movement of physical goods and labor, a central question emerges. How does an owner determine if the enterprise generates a surplus? You need a consistent mechanism to convert those scattered physical actions into a set of organized, measurable figures. The continuity of an enterprise depends on its ability to condense these daily physical actions into a formal financial record. As this flowchart shows, accounting relies on 4 specific steps to distill physical chaos. Step 1 identifies what counts, filtering out non-financial noise to isolate pure economic events. Step 2 is measurement. The event is quantified into a universal currency, weighed evenly against other events. These first 2 steps create a vital firewall. They ensure only objective, quantifiable facts enter the company's data stream. Step 3 is recording. Once quantified, these data points are logged in strict chronological order to build a permanent history. This drive to record data is ancient. Around 4000 BC, ancient Egypt used similar methods to track gold in their treasuries and uncover internal fraud. The system we use today was formalized by a Venetian friar named Luca Pacioli in 1494. He popularized the double-entry bookkeeping method and established the terms debit and credit, concepts rooted in the Latin words for debt and trust. Finally, step 4 is communication. The recorded history is packaged into clear, readable financial reports. Through this 4-step engine, raw human trade is successfully converted into the ongoing, legible narrative of a company's lifespan. To be trusted, final reports must pass a quality control matrix. First, data must be reliable, objective, and unbiased. Second, it must be relevant, arriving in time for decisions. Third, it requires understandability. Fourth, it must be comparable, allowing direct measurement against competitors. If the information fails even one of these checks, the integrity of the system breaks down, leading management straight into flawed decisions. So who is actually waiting at the end of the line to read these reports? The audience is divided into 2 distinct groups. Internal users, like CEOs and plant managers, rely on management and cost accounting. They use this data to analyze production expenses, strategize, and plan for the company's immediate future. External users, like investors, banks, and tax authorities, rely on financial accounting. They review reports to judge the company's past performance, assess creditworthiness, and verify its legal standing. The elegance of the system lies here. A singular translation engine produces the precise data required to satisfy the drastically different needs of both insiders and outsiders. But the system does have strict limitations. Standard financial accounting is inherently backward-looking, and it only processes events that can be quantified in cash. It cannot measure intangible assets. Things like employee morale, public reputation, or the actual value of human resources simply do not fit into the ledger. Yet, even with these blind spots, accounting remains the undisputed language of business. From Babylonian clay tablets to the digital ledgers of today, this language provides the financial framework used to turn economic activity into a series of informed choices.